for today.
Good morning, evening, afternoon. I don't know when you're going to be watching this, but hi. Thanks for joining us. We are experiencing a lot of chaos right now all over the world. And it seems like every day we turn on the news, we tune into this program, we jump on X and we see something else happening around the world. And at a certain point, you kind of start to tune out, except for the really big things that are happening, like Davos, right? You may see a speech from Donald Trump about Greenland, or you may see President Macron wearing sunglasses indoors giving a speech. Is he getting hit by his wife again? I don't know. You see Venezuela being invaded for like 5 seconds by the United States and apprehending their leader. And then you see Donald Trump talking about Greenland and, Iran being back on the radar of places that we should be concerned about the U.S. getting involved with. And a lot of times you look at all of the chaos and you try to figure out, okay, well, what does this mean for American foreign policy and America's interests around the world? And I think that's the right lens to look at this through. But there is another way that I want to make sure that we are assessing this geopolitical landscape. And listen, it's anything but boring right now. And depending on kind of what camp you're in, it can be terrifying. You can think that the United States is trying to become an empire, or you can think that it is about time that we reset things. But either way, the stakes are very, very high. And sifting through all of it and figuring out how it will impact the United States and our interests, like I said, very important. But I want to bring you into the equation, directly you. How does this impact you? And understanding that and having a little bit more insight into what that means for you, I think is incredibly important. And so this is the second installment, but the first time we've actually had a stinger for it. But that brings us to another episode of Gerald, Markets, and Stuff. Only the best stingers. So when we talk about markets in the show, we typically talk about them with respect to a story that we're doing, or a segment that touches on some of the markets, or we talk about the ramifications of any one of those stories that I mentioned to you just a minute ago. But we don't take kind of a holistic view of all of those stories that are happening kind of at one time or over about a month period of time, and see what it means for the markets, what it means for you, and also what it means for our interests around the world, all at the same time. And I thought this would be kind of a fun opportunity for us to do that. And so to do that, because I am no expert in the admonishments, as you saw just the other day with the Davos stuff, will flow because I will confuse Finland, Sweden, and Poland. Not because I don't know where they are, that they have different leaders, but I confused all of what they said, and I got admonished. I bring in people who know this stuff. I bring in people who do this for a living. And so my friend Samuel O'Brien from True Gold Republic is back. So thank you very much for joining us, adding a little credibility to the show when I am trying to talk about the markets. But I do feel like it's almost a bit of a disservice to you, because when people introduce you, I feel like this is how, like, when you want to talk about gold and people introduce you, this is really how you want to enter the room. I mean, I would be stoked. Like, if that should be the front of the website, right?
It should. So, next time.
Absolutely. I'd be very happy. I'd be like, yes, I'm in. Let's do this. Samuel, obviously, and True Gold Republic are sponsors of the show, but this is not an infomercial by any means. We're going to talk a little bit about gold and silver and how all this impacts or is impacted by those subjects we listed a minute ago. But we do want to make sure that you have this information available to you when all these things are happening in the world and you really don't know what to make of it and how that impacts you, how that impacts your portfolio. And I'm going to give you some quick facts, but one thing that I realized early on was that people get money wrong really, really badly early in life. Typically it starts with a credit card. I don't know about you, but in college, they sent me a credit card at Notre Dame when I had no business having credit at all. I barely had enough money to buy my lunch. And it had a $500 limit. And I think they're just trying to hook you, right? You start using this credit card and got a $500 limit, just start spending and paying down interest. And I realized very quickly that I didn't know how to manage money very well, even though I understood the concept. I'd never really experienced it. And getting that right can really change a lot in your life. It's definitely changed a lot for me, making sure that I'm like, not just leaving money sitting in a bank account. If I have extra money, they're not paying me anything for it to be there. So getting into some kind of savings, if I just need it for savings that has yield to it, or getting into something more stable so that I could actually earn money, because it's just devaluing while it sits there, right? So through inflation and other things. One of the first facts is that the US dollar index, the DXY, is down 8.66% versus 1 year ago. So your money just basically is losing power, purchasing power, as it sits there. So I'm like, why would you just not do that? And then why would you not move it into a savings account? And then I started working in the wine business. And one of the fun things about working in wine, probably the same thing with gold, is that you're around probably most of the time, some high net worth individuals are going to be coming across your radar multiple times a day. And you start listening to what they're doing and you're like, that's right. I should probably be doing that as well. If I have a few $1,000s sitting there, I should probably not just let it sit in a bank account. I should probably earn interest, because they always talk about transferring money from these other interest bearing accounts to their checking account, and then I can run their card. And I'm like, you're a millionaire. You're not poor. Why do I have to cover your check, basically? Yeah. Right? So there are things that you can do, and that's one of the reasons that I wanted to do a show like this, things that you can do to help secure financial future and understand the world around you a little bit better. But let me go down through a few more quick facts, and then we'll jump into some of these bigger topics. The S&P is up 13% for the last year. Bitcoin down 14%. Sorry, crypto bros. Gold is up 72%, and silver is up 214%. Again, those numbers are as of the recording that we're doing right now. And I know what you're probably thinking, like, why do I care a whole lot? Well, I don't know if you have a 401k or if you have savings that you are trying to manage. The top number alone is why you care. Your money is sitting there. You think $100,000 house, 40 years ago, 30 years ago, 20 years ago, whenever that happened to be in existence, probably 30 years ago, was the same as 100,000 today. It's not. There's more purchasing power in the past than there is today. So if your money just sits there, it may be the same $100 that's in your bank, but it doesn't have the same purchasing power. The faster you understand that your money is devaluing over time, the more that it sits and it's just cash, the better off you're going to be and the better decisions you're going to be able to make. If you're invested in 401k, understanding what the S&P is and making sure that you understand how to have a balanced portfolio, very important. If you're interested in crypto, crypto is one of the technologies that's changed the world significantly and probably will continue to do so for a very long time. Fantastic to understand that gold and silver are much more stable, but sometimes Bitcoin can have years that are just insane. In fact, if you had blindfolded somebody and just spun them around and said, okay, you don't know what year you're in, I'm going to give you the percentages that something is up, and they saw 214 and you had to label them, Bitcoin would probably be the 214
every
because
time.
It's so volatile,
every
right?
Time, yeah.
Right? You'd be like, no, absolutely, it's that. And gold's probably like 8.6% down. It's probably the deal. But these things are moving in ways that we haven't seen before. And it's hard to predict, and so we're not going to make predictions, but you did kind of make a prediction last time you were here in October, specifically about one of the hottest items out there for investment, and that is silver.
We're seeing tremendous investor demand for silver this year. We've probably sold more silver than we have gold this year. And we are seeing a rise. The stats out that you had, 70%, just shy of 70% year to date on silver. It's insane. There's a supply shortage as it stands. Demand is going to continue to go up, so the price should go up. And then a lot of people are also married to the idea of the gold to silver ratio, which is how many ounces of silver it takes to buy 1 ounce of gold.
Gotcha.
Right now we're at sort of 4,200. It's like 75 to 1. Historical averages for the last 100 years have been closer to 40 to 1. So that would suggest that if gold didn't go up another cent and it stayed at 4,200, silver should double in value, really. And that would be $110 silver. Now, gold, if silver's going up, gold would continue to go up too. It's just playing catch up right now. So I think, if you was to say, okay, what would double in the next couple of years? Silver. Silver next year could very possibly be $100.
Wow.
I wouldn't be surprised at all.
You know what? You nailed that prediction, except you kind of undershot it, right? Yeah. We're not at $100 yet. We're really, what is it today,
92.
roughly? $92.
94 yesterday, 92 today.
Okay.
So.
And we're 3 weeks into January.
Yeah.
You know what? When you hit your yearly predictions in January, do you just take the rest of the year off?
Yeah.
You're just like, oh, this is good. I don't have to do anything.
It happened last year as well. We were undercooked everything last year. We thought that gold was going to finish the year on 3,000, silver maybe like $30, $40, and it just kept going up. So
that is insane. Well, it's not over, really. It doesn't seem. So a lot of institutions are weighing in on this, and there are a number of reasons that the prices are going up. But specifically, JB Morgan said that gold could be over 5,000 by Q4 of 2026, 6,000 plus in the longer term. $100 is obviously imminent for silver, and aggressive analysts right now see it at potentially 150 plus. Again, that's an aggressive projection in 2026. I don't know that people really follow this, because as an asset class, right, gold and silver is typically where you put a percentage of your income, and you don't think it's really going to go up a ton in a very short period of time, right? I think it's much more of a safe kind of balancing of your portfolio item, but this is not a balancing action. This doesn't seem like anything we've seen before, at least not in a long, long time.
yeah.
Is that right, or is it just new to the market, guys?
That was
or?
gold's best year since the 70s, silver since the 80s. So they both just blew everything out of the water. But no, I think it has just started. I mean, we have had 3 consecutive years of growth in both gold and silver now. That hasn't happened since 2011. So if it happens again, I mean, normally what precedes that, especially like a growth of over 38% in gold in a yearly basis, if that normally happens, then you normally have a recession preceding that. And normally it's like a 6 to 9 month lead time. People suggest that we could already be in a recession at some point, or it could definitely be underway. So gold normally goes up, and then we normally have a recession, and that's happened the last 4 or 5 big recessions that we've had. So
it's because the elites know before we do. They get all their money into gold first, those jerks.
Yeah.
Well, that aside, we'll talk about the meeting at Davos here in just a little bit. But one of the reasons that I wanted to dive in, I want to get your take on each one of these and how you see, the potential. And I'll list all of them out really quickly and give you just a quick bit of information about each, but then maybe tell us what you think each one of these could do or as a group. So the geopolitical instability a lot of times will lead to the rising prices, right? If there's a lot of instability in the market or uncertainty, people try to flee to an asset that's a little safer, a little bit more well-known. Bitcoin is becoming more amongst that group, but with a much higher volatility range. So it's going to take a little while for that to kind of claw its way into it, but gold and silver certainly are there. So Venezuela, Greenland, and Iran. So those 3 things, those are 3 big things right now that have just happened, are happening, could happen in the future with Iran kind of taking on a new level of involvement from the United States and potentially Greenland being purchased. But with Venezuela, when we went in and got their leader and brought him to the United States on drug trafficking charges and apparently owning an automatic weapon, I didn't realize we could charge him for that, but hey, we'll take what we can get. A lot of people didn't really understand how important and strategic Venezuela was. They have 17% of global oil reserves, and that's 303 billion barrels. That's more than Saudi Arabia. And yes, it's this really, heavy crude that needs to be processed, but it's massive and it's right in our backyard. And mostly what people talked about with Venezuela was the fact that we did it, that we went and got the leader of another country. And you were talking to me that some of your friends or somebody had a conversation that you were a part of where they were making kind of a comparison. What was that comparison again? Yeah,
effectively it's the same thing as if Putin was to go over to Ukraine and take the president, take his wife, bring them back to Moscow. There would be a nuclear war following that. Well,
maybe, but they tried that. That's what most people forget, because that was
I forgot that. Yeah.
Well, they tried. So they tried to go and take Kyiv. They tried to encircle it and go, and they couldn't. The Ukrainian forces repelled them. It was a very brutal battle. Where I think as the Russians were retreating, they were committing some atrocities potentially, in the fog of war. People talk about this all the time. You don't know what stories are true, what are not, what is meant to be propaganda, what is not. But certainly they tried to go and do it. Obviously, it was a bold move. Whether people agree with it or not, it had an impact on kind of the stability for a lot of people, or the stability of their, not just the markets, but maybe their comfort level with what's going on in the world. I don't think a lot of people pay too much attention. They see some headlines and then they get riled by that.
No, I think like Venezuela was just like, it kind of came out of nowhere for me anyway. I was like, oh, like we can do that? Like that's okay?
Yes.
Okay. And everyone was like so throwing it back. And like I had clients asking me like, well, you know, what does this really mean? I was like, I actually don't know what that means, because like, you know, I didn't know that we could just go into a country, take whoever was in charge, then effectively for a short period, it seemed like Trump was taking over Venezuela and was going to control whatever was happening there with the oil and the reserves and minerals and stuff like that. Seems to have fallen back a little bit from that stance now. But for the first period, I was like, I think we've just overthrown Venezuela. Like we've just invaded it and taken it over. I don't think that is going to be the case, like moving forward. But it was, I think the most interesting thing though with Venezuela, and so bringing it back to like silver and like locking in the gains, like normally a lot of people would sell off gains at the start of each year, especially if you've had a great year, right? You wouldn't sell before that November or December. You would wait until January and take your profits like then, and then you've got, you know, another year to pay your capital gains taxes and stuff like that. So we was expecting, like I think it was around $80. We was expecting a big pullback, like a big sell-off in January. It was like people are going to take profits, trading positions, they're going to close out, and we'd expect it to come back down from 80 to like 65 or something like that. You know, I think 50 is the floor now. And we had like a $2, $3 sell-off. And then Venezuela happened, and then it just went straight back up. So, yeah, the geopolitical events have definitely been a catalyst for gold and silver price rises, or at least locking in and retaining like all the gains that they've had over the last 12 months.
Do you think that if things settle down just a little bit, and there's no sign on the horizon that says they will, but if they settle down, do you think people will take their gains and try to lock in as much time to pay the capital gains on it as possible? Or
no, I think that there's too many factors now in play, especially with silver. With gold, like someone asked me about 2 or 3 months ago, I was like, in what reality could the gold price like really come down? And I said, well, if tomorrow Putin announced, hey, we're pulling out of Ukraine, everything's good. We're sorry. We'll pay. We'll pay reparations. And they sort of bow down, and then maybe Trump cooled off a little bit with Greenland and Iran, and we had like true world peace, like what Trump had wanted on his New Year's speech. If we had world peace, then I'd imagine things would come back down, but I don't think that's very likely.
You don't think world peace is just on the horizon?
I don't think it's imminent. I don't think it's imminent.
I don't know that world peace ever. I mean, to some degree, world peace, yes.
Less conflict.
Less conflict than current. It's funny, especially with the capital gain side. I didn't think about that, and that's just an obvious thing, right? You want to sell it and keep. You don't have to pay your taxes on it until the following April. You can reinvest that money and make some gains on it, and hopefully make enough to pay that off in the future, whatever that gain is. But yeah, I didn't expect that either. And if I had just paid attention, do you guys put out like a newsletter with stuff like that? That'd be great if I was on the email list. So I'd be like, hey, there's going to be a pullback in silver most likely in January.
We do send out emails. We have blogs on our website as well, where we'll like write projections of what we think is going on, how we think things are going to pan out over the next couple of months, quarterly. We normally do a year-end review and a start-of-year review for like what other analysts are projecting the gold and silver prices to move for that year. But everyone's kind of throwing darts against the wall. No one truly knows like what's going to happen. We use like history and what's going on to create a best guess of what's going on, but no one knows. I think that's
well, but it's helpful to have somebody not say, hey, this is exactly what's going to happen, but if there's going to be a pullback in price in January, it's most likely because of this. Right. Nothing else has changed on the other topics here, like some of the demand or some of the geopolitical events that had just happened. Like those things haven't gone away completely. So if there's a pullback, it's likely going to be for this. Don't worry. And I agree. Like I follow a number of X accounts that post information, and I have no idea who these people are, how I ended up following them, if their information is even reliable at all. They're like, oh, this is absolutely based on this, and this going to go to this.
People chart and they I mean, everyone's just creating an argument, right? They're just, this is my theory as to why I think, things could pull back. I mean, what I would say to people that are considering investing into gold and silver is that it's not a short-term investment. Right. So if you're trying to time it on like a week or a month, then like you may come out on top. Or if it goes from, if you're looking at a 70 and it goes up to 90, then it goes up to 110, Like I always tell people, like, be happy with the price you're paying today and look at it for the fundamental prospect of like, it's a, this is real money. It's not just like a currency.
Right.
So you should invest in it and really forget about it for 3 to 5 years. And I'm sure after 3 to 5 years, you'll be remarkably happy. Customers that invested 5 years ago, there was like 3 years where it didn't really do much. And then now people have doubled their money and they're over the moon. So it's, it's just about being patient with it. Just not trying to time it perfectly, because then you're going to be driving yourself insane. Like, I could have saved a few bucks, could have lost a few bucks. This is how it's going to go. But I think that I just look at everything, like, tell people to zoom out, just be happy with what it is right now. That's the price you're going to pay. It might come down, could also go up. It's where you're at.
Do you think it's a better idea? So when I bought, I bought like a specific amount. I think we talked about this last time. Right after the election, just because I'd always wanted to have like physical gold. And so I didn't buy a lot, but I just wanted a little bit. And I bought, and I didn't buy again. And I probably could have. Would you recommend people buy kind of in a chunk, or would you say, hey, like if you're going to keep this as part of your portfolio and you're going to invest, say you get, whatever excess money you have, you're going to put 80% of it into the stock market or other assets or a 401k plan or something like that. And you're going to keep 20% for buying stocks individually that you like, maybe you like Apple or Nvidia or one of the tech stocks out there, and 10% on gold and silver. Would you recommend they keep buying that way? They get some of that fluctuation goes away a little bit, where your average price into the market's a little
dollar cost averaging always is normally beneficial. But I think that a lot of people that have invested in the last couple of years, have more funds in retirement accounts, so 401ks, IRAs, Roths, that they're like, okay, well, I may have like some funds in my, in my investable accounts outside of retirement, but this is like my real nest egg. I've got, 500,000 here, and I want to protect a portion of that, in physical gold and silver. So for those transactions, we normally see people taking a percentage, maybe 20%, 30% of that, and doing one lump sum investment.
Gotcha.
And then you're probably not going to play around with it too much, after that. But if people are still working and they're fortunate enough to have disposable income every month where they can invest, then I would do that on a monthly or quarterly basis and just keep buying and buying and buying. And we have some clients that have maybe bought from us like 40, 50 times, and I'm sure their dollar cost average is pretty good. I've been buying for 12 years, so
that's a lot of numbers to average.
Just dollar cost average over it. But you just got to keep moving forward. I think with anything, you just keep buying. It's the same with like if you're trying to get into crypto. Like, would you buy now if it's like 90,000 or whatever it may be? Like, probably not. But if you was just putting 1,000 in a month or 500 in a month, like over the last couple of years, then it probably worked out pretty well. So it's a different way to do it. I mean, you also don't want to invest like too small of an amount. You probably do want to build it up. So I'd say like quarterly is good, or whenever you want to pivot around.
So that's something that I'm going to start doing. And I invest in, like my 401k and things like that. I'm not going to give all of my personal information out to you guys, but just buying kind of over time for, cryptocurrency, the ones, the three basically that I like, and I'm safe enough in them, as well as gold and silver, like just kind of adding these things in, even in smaller amounts, because I think there's this understanding that, I don't have enough money to do it. It's like, well, just get started. You'd probably be better off than if you didn't. So I think that's probably a good way. Sorry, I derailed us from the geopolitical, because I just had a random question that I needed answered. But let me go to another one really quickly. And we mentioned this already with Trump's claims on Greenland. Obviously, this is creating some tension in another part of the world, right? So Venezuela creates tension in Latin America for us to some degree, but specifically with the connections that China has to Venezuela, and some of the connections that Cuba has to Venezuela, providing some of the protection. Obviously not great. They didn't really do that good of a job. And it kind of throws things off a little bit for us. But other than just the kind of, the security standpoint for the United States, making sure that our national security is protected and being able to protect our allies, this throws us into a little bit of a quagmire with Europe. So different players in this one, they're probably not going to care as much about Venezuela. Doesn't impact them directly. They may care generally, but Greenland's a different animal right now. Denmark is pushing back considerably. It's causing a rift between some other major players in the EU. And I think this is just Donald Trump doing what he always does, which is coming in really high on what he wants and then kind of settling back into a range of acceptable outcomes that he really wanted from the beginning. And I think that's what he's doing with Venezuela. Like, maybe I'll run the country, like that was basically like, hey, if I leave you in power, get it. Yeah, exactly. Like if I leave you guys in power, by the way, you owe us $11 billion. There was a court ordered judgment against you guys for these 2 oil companies. Like, pay that you guys get to stay in power a little bit, but like be friendlier. Maybe he'll do that with Greenland. Maybe he backs off into a deal. But Greenland has something a little different. So 36 to 42 million tons of rare earths. That's the world's second largest deposits after China. Plus they have oil, gas, uranium, and other critical minerals. So that's a little bit of a different deal. So when Greenland started to become a thing, he probably about a year ago now, right after his inauguration, maybe within the first month, started talking about Greenland. And then it kind of just went away. But now it's back on the table, and probably back on the table for the last time. I think something gets done. Either he completely gets rebuffed and we're pissed off at the EU, or a deal gets done. What is this doing to the market?
I mean, I think that there is uproar, obviously, especially even people, in the UK that I've been speaking to are probably against the idea of taking over Greenland. And I think that the general consensus in the US as well is that it seems like a fairly wild idea for us to buy Greenland. But I do understand it from like a defense point of view, is that he wants to keep safe, and Greenland would help him do that. But obviously I think there's a line that we've crossed. What we don't want to happen is that Trump puts like the US like on an island on himself, even though he might have a really strong island, but you still need your allies, right?
Right.
And so I think that things would be smoother if they could work out like a deal. I think, maybe like nuclear bases and, help out with military bases in Greenland, that would be good. But I think if we took over Greenland, then that would create a lot of friction within Europe.
So short of the should we or should we not, I think we should, but I understand the point. I think we should buy it, right? And I think obviously to purchase something, you've got to have some willing partners.
But what does that look like though as a deal?
As a deal, they've been floating a deal right now, $100,000 to each resident and somewhere around $700 to $800 million to Denmark to buy it. I don't know if that's the real number that's being floated around, or if that's just somebody on X having a go or whatever. I have no idea.
I've definitely had the 100,000 per resident idea. But yeah.
I mean, but so either way, what does that do to, I guess, the gold and silver market and kind of the markets in general? It seems like there's a little bit of friction, but is it really that big of a deal? Because they're really just negotiating in my mind.
They're negotiating now, and I think it's the same with Venezuela and the same with Greenland. Like, these are fairly monumental things. I think if it was anything other than what happened recently, and Greenland had happened like 7 or 8 years ago, or 10 years ago, then this would be like a huge deal. Same with Venezuela. But because this has almost become like the norm, where we just kind of have crazy stuff happening all the time, it's been fairly non-reactive to it. It's still been like pretty much there. I remember when the war broke out from Russia and Ukraine, so when Russia first invaded Ukraine, and the gold and silver market were very calm before that. Wasn't much going on at all for 2 or 3 years. And then that day, like, our phones just blew up. Like, and it was we were just moving into a new office down in Miami, and there was only 3 of us there, and I had to like get in some friends. I was like, you need to answer the phone, because
like, well, what do I say?
It's not stopped ringing. People were just buying and buying and buying, because they knew war, geopolitical uncertainty meant gold prices will rise, everything else could struggle.
Right.
So that's normally what you happen when you have big key events happen like that, but now it's just become the norm. And I think that
are we becoming desensitized to it a little bit?
Yeah, I think so.
I mean, are investors though? Because typically the investor market, the retail market is pretty easy to move with a headline.
They're easier to spook. But again, I think that we've become to accept this is what happens now, is that Trump will probably do what he wants. He'll act or try and push for something and then deal with it later, or, as you were saying, back down a little bit and accept that. So I think that the markets like Trump, I think that people feel very confident, especially in the stock markets with Trump in, because he doesn't really want a recession. He probably won't let that happen. So that's why they probably stand behind a lot of the stuff that he does. And that's why the markets aren't really spooking too much either.
In Davos, when Trump was giving a speech, either at the speech or in another kind of portion. They have all these different meetings and different things. He said that he feels like the market will go above 50 pretty quickly and will probably double. And again, this is Trump. He's the best used car salesman ever. In a lot of ways, he's a great promoter,
he's a
right?
Great talker, and he definitely talks things into it.
But that's to your point. He's kind of reassuring that investment crowd a little bit, like, hey, no matter what I'm doing here, I'm going to protect and make sure that these guys and the market has a positive outcome. And it's been doing pretty well for just about everybody involved right now. Now,
it has come down a little bit in the last couple of days.
Yeah. And typically when he does something with tariffs or somebody retaliates, it moves around a little bit. Really quickly, I don't know if we have the lower third guys, but you said if your phones were ringing, so people, if they call you, right, so you can go to lwcgold.com or call 1-800-628-4653. You can sign up today and see if you qualify for a no fees for life IRA. Why is that? Like, is the IRA the portion that makes the most sense for a lot of people? Is that why y'all are promoting it, or what's?
Yeah, I think so. It's like people obviously have income that they invest and save and stuff, but I think for a lot of people, they've worked hard to save for retirement, and a lot of people don't really understand what their retirements are invested into. Especially people that have like TSPs, government accounts, or even like workplace 401ks, like it's invested, but I don't really know what it's in.
Right.
Some people have like horrible returns and they're not even keeping up with inflation. So I think a lot of people, especially when they hit, 50 plus, 60 plus, think, okay, well, I could probably do with putting my retirement in a good spot for one of two reasons. One, if we have a recession, they don't want the retirement value to drop. And secondly, to keep it like safe and secure in gold. And obviously the gains have been pretty good too. So yeah, I think that's probably a more core concern for most people, is that their retirement savings, that's probably the bulk of what they have tied away. So people like to do that. So we offer the no fees for life IRA because there are fees that come with it, right? So you have like an annual storage fee, you have an annual maintenance fee, regular fees that will probably be tucked into like a Fidelity account, but we're just like more transparent with it. So
nice. Well, that's a good way. And I know, if you're close to retirement age and you're like, I don't know if that's as big of a deal to kind of balance out the portfolio. Talk to people who are trying to retire in, June of 2020. So the stock market, I remember I was on the first time I'd ever been to Hawaii. I'd been planning this trip for a couple of years. I bought this, like 7-day thing at an auction and got it for what I thought was just like the biggest sweetheart deal I'd ever had, but had to postpone the trip for a couple of years. And we were in Hawaii in, I guess, the end of February. And the markets, and I'm with some friends in the wine industry who are well off friends, and they're looking at the market and it's dropping like a rock. And all of a sudden, for everybody's portfolios are just going down big time. Now they're buying into it because they know that at some point it's going to come back up. But if you're trying to retire, then that was a really awkward time to try to pull your money out. I
think as you're approaching retirement, you want like an insurance policy as opposed to looking for aggressive gains. And normally that's what gold is and silver is. It's an insurance policy. If the markets come down or if there is like a true recession, then gold and silver will do pretty well and they'll just bail out what you've probably lost in the equities markets. But obviously in the last 12 months, it's been a different story. It's been like a pretty aggressive growth product, which is great too.
No, it's not something that I ever would have thought, because the last time that we talked, this time we're talking about just kind of instability and chaos kind of around the world. The last time I was talking to you about all of these things going up at the same time and how that was just very odd to me. And that was purely organic. I wasn't looking for a topic for our conversation. I was just thinking about it in general. And I was like, man, when is the last time that all of these things were going up at the same time, and then trying to figure out the role that maybe AI was playing in that, the demand behind that, and some of the physical infrastructure that was needed. But this time it just seems like kind of global chaos is the theme.
Well, actually, since our last conversation as well, probably October was a high point for a lot of stocks last year.
Yeah.
And then Q4 wasn't great for a lot of stocks, and then things have sort of bounced back a little bit in the last month, I would say. But gold and silver since then, just kind of carried on going. So things have changed, but there's lots of dynamics going on, which has made it very strange out there.
Strange is a good way to say it. It's not a technical term though, so he's not looking to get admonished. Nobody is. All right, so final piece is Japan and their bond market. So there was a major bond sell-off. I'm not sure if you had seen this or not. That had a bit of a ripple effect on the markets, and the sell-off occurred after the Japanese Prime Minister indicated policy of stimulus and tax cuts. So flooding the market a little bit with more government spending, cutting taxes. The PM just called snap elections to usher in the government that's favorable to these policies. They can do that in a parliamentary system, which is one of the reasons I don't like them. Fear kind of is the policies would devalue the currency too much and kind of create the sentiment that, sell your bonds now before they're worthless. Is that something that will basically drive people into gold and silver a little bit more? Or do you think that'll have any impact at all?
Yeah, so I think Japan is actually like one of the biggest debtors to the US. So whatever happens in Japan, we would definitely feel ripples of that in the United States. But they have been talking about the Japanese bond market for a while, because I believe they're at 0% rates for quite a while, and then they started slowly bringing them up. But now I think that their debt to GDP ratio is 220%. So it's effectively impossible to service that. I think that in the US, we're probably at 120%. Ideally, you don't want to be over 100%.
Ideally,
it's an ideal world. Not many countries adhere to that. But yeah, like Saudi Arabia are probably like 30, 40%. I'm pulling that figure out, so fact check me on it. But I
they
definitely
will. Don't worry. They live for that.
But Japan are definitely well over that. So there's always been a lot of strain on that, and they don't really know how to resolve that problem. So if they own a lot of US Treasury bonds, there could be some trouble there.
Yeah. Well, we'll see how that plays out. But I feel like so we're gonna get together on a regular basis, and I feel like the next time that you come in to talk about this stuff, we're going to have to play another clip of what we predicted, and I'll get your predictions on gold and silver kind of formalized as much as possible without making like a prediction. You're like saying, I think these things could happen, because we're not giving you investment advice. We're not going to tell you to go out and pull all your money out of your 401k and bet it all on silver. Woohoo! Going to the moon, diamond hands, all that stuff. We're not going to do it. But there's a lot of chaos going on. We don't think the chaos is coming to a close anytime soon, but there's also a lot of demand that is fueling this as well. So you were just telling me prior to us jumping on air that there are some physical shortages right now.
Yeah, huge physical silver shortages. So we have 4 or 5 US based suppliers. Some of them are global suppliers, some of them are just US, and they're all effectively stripped out of silver. Like I had an email when I got off the plane, and it said, it was the quotes for the day, premiums and stuff, and it said we're essentially all sold out of silver. Our main suppliers are probably delivering Eagles now, like US American Eagles, end of February. So it's like a 6-week delay right now, and that could be worse. And just the inventory list has gone from probably 50 products down to like maybe 5 or 7.
Really?
This has happened before. During COVID, there were silver shortages, and we could take orders from you. So you say, "Oh, Sam, I want to buy some silver." I quote you out. Okay, you buy $30,000 worth of silver. And I say, okay, it's going to be delivered in 4 months. You'd be like, okay,
wow,
that's not ideal. And you can lock in the prices, but we just stopped selling silver because we didn't want people waiting for 4 months for their products. And I think that's around the corner. The main reason that I think we're seeing from that is obviously the prices have gone up, and also China, as of January, have also stopped exporting silver, and they were producing a lot of silver for the world. And silver is different than gold. Like gold is normally recycled. People normally pull gold out of products, electronics and stuff like that, and it's reused. Silver, because it's always been cheaper, like when it was $20 an ounce, people just had silver and stuff, X-ray equipment, all that sort of, and just threw it away. It was never reused. So it's churned through a lot. The demand has gone up astronomically in the last couple of years with AI, data centers, solar panels, electric vehicles, all that sort of stuff. And so there's been a deficit for the last 4 years of like demand outstripping supply. So I think that's just all coming to a head now, and we're feeling it on the front end of like the physical sales. Is that if people do want physical silver, then you're going to be able to buy it, maybe, and if you are buying it, the premiums are going to keep going up. So you just got to try and work that out.
Yeah. Well, and so let me just touch on China really quickly, because the export controls that you're talking about, right? So only 44 approved firms can actually export, and China controls 60 to 70% of global refined silver. And you actually had Elon Musk weighing in on this on X saying this. I can't do his accent. This is not good. Silver is needed in many industrial processes, and this was on December 26th.
Sounded more like Goldman,
yeah, this is not good. What did he? It was he would say I'm Danish, or what did he say? I'm
Dutch.
Danish. Isn't that
Dutch,
weird?
Yeah.
I'm just gonna keep messing with those people. I mean, they're probably good people, but we did defend the island in World War II. The Dutch lost after 6 days of fighting. I get it. It's fine. You called us in. We came in. We pitched it. We asked you if we could buy it right then, and you said no and kicked us out again. Listen, not the nicest thing to do, but I understand. So really quickly, you mentioned the silver double eagle, right? Is there a gold version of that as well?
Yeah.
So if people use it, it can be interchangeable one way or the other.
Yeah, you can get a gold or silver. Yeah, it's like one of the most common American products.
Okay, so do those typically cost just a little bit more than the spot price?
Yeah, I would say that spot today is like 92, and you'll probably pay like $110 for this.
Okay, is it worth the difference?
Yeah.
So the resale price will pretty much track the difference in spot price.
Yeah, so a lot of the time, I mean, even though you will pay a premium for any product, if it's normally a coin, then you're going to probably get spot plus when you sell it back. So you're not always like losing that. Bars right now, and a lot of common bullion actually is selling below spot. So and I think the reason for that is that prices have gone up so much that a lot of dealers are becoming underwhelmed. They don't want to take too much of a risk. You go in there and you want to sell 10 ounces of gold for spot prices 48,000. They might offer you 44,000 for that, just because they don't want to be sitting on the risk.
Right. No, that makes sense too. But something else people need to know, like I'm a big fan of having the physical product in some amount, and obviously there are other things that you can do outside of that. I'll touch on that in a second, but if you go and sell that, don't be surprised if somebody offers you a little bit less than you paid, right? Because you're going to sell it to a reseller, most likely. Like if you go to like a gold and silver shop.
Yeah, a gold and silver shop or a pawn shop. Sometimes clients do come to us and they say, "Oh, I took my gold or my silver to this local guy, and he offered me, below spot for it. I thought it'd be worth more than that." I'm like, "Well, he's just trying to make some money off it."
Yeah, he's got to resell it.
It is what it is. So we always tell our clients to come back to us directly first, because we have preferential rates for buybacks for our customers. We obviously know what we've sold you, and we just make it easy as well. Like you don't want to be scrambling, and if you've got, we're seeing a lot of people right now actually, especially in the last couple of months, that are pivoting from gold to silver. So a lot of people right now are taking some of the profits they have in gold that maybe missed out on some of the exposure on silver, and so we're buying the gold from the customers and then instead returning silver. Yeah, and people sometimes taking some cash as well. But if you do that, with a company that you've already bought it from, then it's a lot easier. We know what you got. We know what it's worth. We know what we're going to give you for it. We know what you've paid for it as well. So we can also work with you to figure out if it's worth doing, if it's a good deal or not. Right. Or it might be worth holding on to it for a little bit longer. Yeah.
Well, that makes it easy. I didn't know that. I saw a lot of people complaining on X. By the way, also somebody who is not going to want to have their posts saved for posterity. I think I mentioned this too. So hold up the coin so people can see that. We've got a little bit of a special promo we're going to do here in just a second with it. But it went up to 70 and somebody on X was like, if you buy silver here, you're a moron or something like that. And now it's like, obviously they're not going to want to go back and look at that. It's up $20. So another, 30%, 40%, whatever it is. But one of the things that I encourage people to do, so listen, like I said, we're partnering. I would give this advice to anybody right now. This, again, I went through this exact scenario and I spent about a year trying to figure out where I should buy from, because I'm like, I want to have physical gold and silver. And I'd heard a lot about, the IRA stuff, but I'm like, I want to start physically because I'm actually trying to fill those kind of buckets. Like I'm contributing to my retirement, I have life insurance, health insurance, all of these different things. All right, now I want to have something like a physical asset that's not just cash sitting around. And it takes time to kind of develop enough where you're like, okay, I have a chunk that I can go now and put into that. So it's not something you do overnight. And I did it, but I didn't know where to go. And so it was very, very helpful to finally find a place that I could buy from, I could feel comfortable with. I had never been through the process. And so you will probably understand this more. Like I called and I was like, yeah, I'm thinking about buying it today. And then I got a price. I'm like, okay, well, let me call you back. Well, you have to call me back by this time. Otherwise that price isn't good anymore. I'm like, oh, well, that makes sense. I forgot this stuff still moves.
Prices change.
Prices fluctuate.
A big rate right now as well. It's scary. I mean, it's almost like gold is probably up $150 today, like on the average. Yeah. So, You can't hold prices anymore. It's definitely.
How long do you hold them typically when people call?
End of day.
Yeah.
24 hours.
But that could move so much. Do you guys just eat it if it does?
No, I mean, when sometimes we're not buying gold in the morning, selling in the afternoon. So like we kind of know what we're good for.
Gotcha. Okay.
But yeah, I mean, ideally, someone commits to something. People are good men to their words. Then we'll say, okay, we'll hold it for you, and that's fine. Just pay us, and we lock everything in our end. They pay us, and then everything's good.
Takes care of the days or weeks or whatever.
Yeah.
You do. Okay. All right, that makes a little bit more sense. It's not just like a just-in-time, like you buy it and then...
Yeah, ideally, if we get paid quicker, then it's better for us. but no, if people start the IRA process, then that takes sometimes anywhere from 2 weeks to 5-6 weeks. So we're obviously going to lock it in once everything's settled.
Okay.
And you have the cash there, and then we can just do it.
Okay, perfect. So what is the deal? You said there was a little deal you're going to offer on the silver.
Yeah, so for today or whenever this shows, so we're going to edit the landing page to the first 20 people that sign up or call and just say that you saw me on the show, and we're going to give away a silver coin.
Do they have to mention the gold member clip?
Yeah, mention gold member. And we'll send you a free silver coin, no catches, no gimmicks, anything like that.
Nice.
Just a little giving back. Your audience is
free, almost $100 right now.
Yeah.
I mean, with shipping, probably pretty close.
Yeah, definitely.
That's awesome. Well, I love that. So I just one quick final thought. You and I talked quite a bit about AI the last time, kind of driving the demand. Obviously, we talked about nuclear, where to put your money, some of the things that are going to be touched by AI. They need more power. Obviously, it's really funny. We talked about it on the show with Davos. You've got CEO, is it Larry Fink, CEO of BlackRock, basically coming out and saying we don't have enough energy. We're not going to get there with solar and wind. It's all of a sudden, this benefits you, and you're yeah, burn all the oil. Who gives a crap? But there's so many things that AI is pushing right now, and demand for gold and silver is definitely one of them. Which is higher right now? Is it silver specifically, or is gold?
Yeah, so I would say that when you look at how to price gold, it's probably 50-50.
Okay.
Just, maybe 33, jewelry, some industrial tech usages, and then central banks buying and retail buying of investment grade gold. With silver, it's probably closer to a 50-50 split.
Really?
So you probably got, 90-10. I would say that 90% of the drive for silver.
Hold on, 50-50 to 90-10 is that's different, yeah.
This the morning flight has killed me. 90% of the demand would be industrial demand for silver, and then 10% is probably investment demand. So
wow,
that's why we've seen it go up so much, because industrial usage and demand has just gone up so much. Obviously, there's been more constraints on the supply chain as well, especially. I'd imagine since China's shut off a lot of the exports, there's more panic buying that's happening right now. But that could definitely flash out and be a long-term problem as well.
Jeez. Well, so a quick stat, you said, banks are kind of doing this. So you've got these institutional moves as well. So from January to November of 2025, you had 297 tons purchased. Is that tons or 1,000 tons?
Metric tons.
Metric tons, yeah. Of central banks that are buying it. Countries like Poland, Kazakhstan, Brazil, Turkey, and Poland just approved 150 tons more to be purchased. And they now hold more than the ECB. And BRICS nations bought $91 billion in gold in the first 9 months of 2025 as well. So I think there's a number of people who think that this is just the beginning. Obviously, gold. JP Morgan gave us some guidance on what they think the prices will be if the chaos continues, and it looks like a lot of it will in some form or another. Because when you have Canada cozying up to China, France saying they need to have more Chinese investment, and we obviously look at that and say you can trade with who you want to trade with, but you have to understand that China is completely different than the United States. It's a very different animal, and so when you start to try to get in bed with them, and you're right next door to us and integrating that, it poses a threat to us. That's not something that's going to resolve overnight, it doesn't seem. And a number of countries making those new alignments, or at least strengthening partnerships that they've already had to a different degree as they fight with the United States over President Trump's policies. That doesn't seem like something that's going to go away. Obviously, the AI demand is going to continue for a while. There will be I think some people have described it like, if you are worried about an AI bubble, it's likely a peripheral bubble, kind of like the .com crash was more of a peripheral bubble, like a bunch of speculative internet companies went away, but a lot of the giants kind of stayed and took a hit and then came back. And a lot of the tech that was developed was what fueled the growth right after that. So we'll see some of that, but man, I don't see these factors abating anytime soon. But then who knows? Maybe an asteroid comes along that has, the Earth's worth of silver, and we're good to go.
No, I think there definitely feels like we are in a bubble with the stock market. If you look at the Buffett indicator or any other indicator, everything is way overvalued. That's been the case for a long time. But people would probably now suggest that silver may be overvalued as well.
They were saying it at 70 on X.
Yeah. So it's as I said earlier, it's very strange. But I think that we are massively overdue a recession. What's going to cause that recession, whether it is AI, whether it's something else, we're not going to know until it happens, and we're kind of amongst it. But I think something big will happen. But with those central banks that, and all the nations that are really hoarding gold, if you look at that list, all of them don't really have favorable relationships with the US. Right. And that's the trend that we've seen since the Biden administration weaponized the dollar against the Russian people, really. They weren't affiliated with the government, but all the Russian people, you had a Russian name after the invasion of Ukraine, seized all the assets, kicked them out of the SWIFT system, and really punished them, kicked people out of the Olympics, tennis matches, soccer tournaments, all that sort of stuff going on. So it was that weaponization of the dollar which has turned a lot of the other nations to, instead of purchasing US treasuries, they're now purchasing physical gold and silver, because the Russian holdings of gold is probably what saved them in this period where they have been sanctioned. Really? They had, I believe, about 33% of their reserves in physical gold. In 2022, that's probably doubled since that period as well. So they did well doing that move. If they had that all in US treasuries and they had all those seized, then they would be in grave danger. So a lot of other countries are seeing that, and they're saying, well, look, we won't keep all our eggs in one basket with the US treasuries. We'll buy some gold as well.
They'll have a balanced portfolio as well.
Yeah, they'll keep it controlled. They'll keep it controlled. So it's a hedge, it's safety. A lot of these countries, Poland, Turkey, Brazil, they're not planning to go to war with the US, but they're saying, well, you know what, something could happen. We'd rather have a portion of our money in somewhere which is going to be safe and no one can take it away from us than have all of it, out on the table.
Yeah.
And that's what I think we're going to see, and that's not going to stop.
Okay, what is before I read off a little bit of Goldman and some other analysts and what they say, analysts, gosh, sorry, the brain turns off at a certain point. What is your prediction for what we might see in 2026 for gold and silver?
2026, I think that it's not going to be a straight line going up. I expect by the end of the year, gold to be around about $6,000.
Really?
I think it will continue going up, maybe about the same rate as last year. I think silver is just going to keep going. I would say silver is going to be 180. 180? By the end of the year.
When I said 150, some aggressive, you're like, that's not aggressive enough.
Yeah.
You just didn't say it.
I see that there's a guy, good guy, you should watch the interview, but it's on Tom Bradshaw. He's a macro strategist, but he speaks a lot about gold and silver, and he was stating like $9,000 gold by 2028 and $375 silver by 2028, which is not that long away. That's 2 years out. So in order for it to get there, I think there's something bad is going to happen. There's going to be a catalyst to kick on the prices. If we do have a true recession, gold and silver prices will come down a little bit. So we have to wear that, because if there's, if people are selling off their positions in hedge funds and mutual funds and there's some gold in there, then it's going to come down a bit. But it's always the first to recover and then go up. So yeah, I think my prediction is 6,000 gold, 180 silver.
180 silver. Okay.
And I hope I'm undercooking it.
That would be great. Well, it's so Goldman, Bank of America, HSBC, they're all clustering around 5,000 for gold in 2026. And then you nailed my last dollar figure for both gold and silver, having some analysts saying potentially in 2028, 9,000 gold, 375 silver. Either way, make sure you go to lwcgold.com. Go ahead and throw up the lower third. Do business with the guys that support us. If you are going to buy gold or silver, physical, or if you're going to use an IRA to do it, whatever method you want to use, give these guys a call. They'll take great care of you. And They will make sure that you get the right products, whether that's just the double eagles or the bars, or is there any other thing that you can do other than the IRA or physical? Is there another way?
No, we don't offer like any
custodial
ETFs and stuff like that. You can, if you're buying a lot of silver and you don't want to take delivery of that, if you bought $100,000 worth of silver, then it's going to take up quite a bit of room. So if you want help with vaultings and stuff like that, then we have partners with vaults all across the US. We've got some in Texas, California, Vegas, Florida. Any Brinks facility, we can set you up a vault, and then we just ship the metal to the vault, and then it's yours. So that's an option too. But I would say, the beauty of physical precious metals, if you are buying outside of a retirement account, is taking delivery and holding it.
It's kind of nice.
I think it's powerful. I think it's good. You never know what's around the corner. So it's always good to have like at least something there where the lights go out, you've still got something to barter with. So I would take delivery of it, unless you've got lots of cash and you want to convert all of it into something big like silver, then you can do storage.
Perfect. Very good. Well, True Gold Republic, guys, go to lwcgold.com. Like you said, the first 20 people to go there or call and mention Gold Member. You have to mention the Gold Member clip. I don't know. Well, maybe we won't hold you to that. But if you do, I'll be very excited that you did. You get a free Double Eagle Silver 1 ounce coin sent to you. Samuel O'Brien, thank you very much. Make sure that you have physical gold, silver, or wine, because people will always want to get drunk, even at the end of the world. We'll see you next time.
Subject for today,